Meanwhile, the New York Federal Reserve revealing this morning the amount of U.S. Treasuries held by global central banks hit its lowest in more than a decade, the drop of about $130 billion just since August, raising fears that global de-dollarization is accelerating. For more, let's bring in BK Asset Management Managing Director of FX Strategy, Lien. Kathy, great to have you with us. It's not just this drop held in Treasuries held at the New York Federal Reserve Bank, but it's also the rise in gold, it's the weakness in the dollar, it's all these things combined, Kathy. What do you think is going on?
Well, I think that the de-dollarization is impacting the rise in gold. It's playing a very big story. We're seeing a structural shift, and normally custody holdings will fluctuate based upon global conditions, interest rates, who's managing the assets, but this is a deeper issue. I think we started to see a significant decline after we had the initial tariffs. So tariffs and geopolitics have been a big part of the story, and this has pushed a lot of central banks to think twice about what kind of assets they want to be holding. And when trade becomes unpredictable, and we're still seeing new tariff announcements, every single month, central banks are starting to look for ways to diversify and protect themselves from U.S. policy risk.
At the same time, we have a Treasury market that's pretty stable. So how do you reconcile the two?
So we do have a Treasury market that is fairly stable, but I think we are in an environment where investors, especially given the U.S. U.S. government shutdown and the extreme level of the deficit, the Treasuries are no longer seen as true of a risk-free asset as they may have been, a decade ago. So this is also affecting the dollars and the attractiveness of Treasuries. So central banks, what they're doing is they're not necessarily rejecting the dollar, but they don't want to be overexposed to it in this type of market environment. So there's a lot of factors that are playing into the reduction in Treasury holdings.
Kathy, the dollar stabilized and bounced recently, but still it's probably having its worst year since the 1970s. And I think it's policy, actually, to weaken the U.S. dollar because we have $39 trillion in debt that we're not going to grow our way out of. The question is, at what point does a weaker dollar become problematic?
Well, the weaker dollar, as well as the lack of enthusiasm or reduction in enthusiasm for U.S. Treasuries, is a huge problem because I think, first off, it's going to increase borrowing costs, making the Federal Reserve's job more difficult. It's also going to hurt the liquidity in the Treasury market, and then also, hurt the dollar's dominance. But as you said, this could be part of the plan. I do think at some point, it's hard to say, I don't have a magic ball telling me when, but I do think if borrowing costs don't come down as much as the Trump administration or the central bank wants, that will become a more serious problem.
Kathy, would you agree that we're in a new kind of inflationary environment? I mean, that's what gold is telling us. And obviously, bonds have been terrible for the last 3 or 4 years. It looks to me, as a technician, that they were in a new secular bear market for bonds. To me, that's the bigger issue for Treasuries. That it's just we're in an inflationary regime, and so that's why people are moving maybe some of their safe assets from bonds to gold. It's not so much that they're afraid of the dollar, but just that they don't want to own bonds.
Right. I don't think they're necessarily afraid of the dollar. They're really just looking for diversification. Pretty much since the sanctions on Russia in 2022, central banks have been adding to their gold reserves. And actually in August of this year, the total value of gold reserves actually exceeded the value of treasuries for the first time since 1996. So this is a really big trend. And looking forward, 3/4 of central banks say that they plan to continue to buy more gold over the next 5 years. So, gold is also a safe haven without the policy strings or sanction risk. And I think, gold is telling us a very big story of a lot of things that are happening beyond inflation concerns that is driving de-dollarization.
Kathy, it's Tim. I'm a huge gold bull, and for all the reasons you've mentioned, but the number one culprit of de-dollarization is China. You can't tell me China, who is the biggest producer of gold, who has every interest in making Hong Kong and also Beijing a money center, the renminbi backed by gold. The more gold reserves they have, the more legitimate that currency is. Isn't this really about China? Everything else has been going on for 25 years, but this move in gold in the last 12 months with announcements by China in terms of their gold position and their treasury holdings inversely correlated to that, this move in gold is China to me.
I think it's often about China. You see today's markets. Today's markets, the sell-off is driven by the rare earth announcement by China. I think China plays a very big role in asset holdings as well as the direction of a lot of different industries. But trade settlement, which is what I think you're talking about, in non-dollar currencies is very much a trend that China has been advocating and been pushing for. So as you said, by making gold more of an alternative to a dollar, more attractive one, this diversification is going to affect the demand for U.S. Treasuries in general. So, I mean, it's really about central banks looking for Plan B. They're looking for, what's happening over the next, 3 years, and they're looking at the more attractive option of gold versus the dollar right now.